Welcome to this webinar. My name is Alison Ensor and I'm Senior Partner at Foreman's. Foreman's is a specialist chartered accountancy practice helping locums and the self-employed to make the most of their tax allowances whilst remaining compliant. This webinar is intended to look at the new off-payroll working rules for the private sector. The rules were implemented for the public sector in April 2017, so we have a fairly good understanding of how they work. It was initially intended to apply these rules to the private sector in April 2020. I'm going to look at what it actually is, who it affects, how the rules are applied, the appeal processes, and how payments are calculated. It is a complex area and I hopefully will cover the main facts in the following slides. However, if you have a more detailed query or something that I don't cover in this webinar, please feel free to contact me at Foreman's to discuss further. So let's start with what is off-payroll working. HMRC are trying to identify those individuals effectively working as employees but through an intermediary. This is to ensure that they pay the same tax as an employee working directly. HMRC will look at anyone working through an intermediary, whether that is a partnership, your own personal service company, or another individual's business. Note, you must be working through an intermediary for these rules to apply. If you are self-employed working direct for your client, you will need to consider the IR35 rules yourself and make a decision as to whether you fail them. The legislation specifically excludes umbrella payroll providers. The reason for this is since the removal of the ability to claim travel and subsistence through an umbrella payroll, the umbrella employee is being taxed as an employee and paying the same rates of tax and national insurance. The off-payroll working rules are coming into effect in the private sector from the 6th of April 2021. The main change is that the deemed employer now makes the decision as to whether the rules apply to this particular contract. Previously, you should have been making that decision yourself. The rules will only be applied to medium or large-sized organisations, and small private sector businesses do not have to apply the off-payroll working rules. This is going to be important when you are agreeing your contract, because you will need to know how you're going to be taxed in order to make the decision as to whether you want to accept the contract. Without looking at the actual accounts of the client, then the best way is to ask your client if they intend to apply the off-payroll working rules to the contract. So if your client decides that they need to apply the off-payroll working rules, what do they need to look at to make their decision? This is where the IR35 rules are applied. IR35 refers to a specific HMRC document called Inland Revenue 35. This is not a black and white decision. There are very grey areas and a lot of applicable case law. There are three main aspects that need considering. Control. How much autonomy do you have when completing the work you've been contracted to undertake? What, how, when and where you complete that work should be under your control. Substitution. Is your business being contracted to provide the service? So could you send another suitably qualified person if you were not available? Mutuality of obligation. Does the contract mean that your client is obliged to find you work? And if you are offered that work, you have to accept it. The more obligation, the more likely that you fail the IR35 rules. Your client should look at the rules, the contract, and what actually happens in practice, because this is what HMRC will be concerned with. Once your client has made their decision, they should issue you with a status determination statement. This is abbreviated to an SDS. The SDS must be in writing and should give you the decision and why that decision has been made. Your client should not be applying a blanket status assessment across all its contractors and locums. Every decision should be made on an individual basis. If you disagree with the determination, then you can appeal against it. Following the introduction of the rules into the public sector, the legislation has introduced the ability to appeal. Your client should provide you with their appeals process, and you must make an appeal according to that process before the last payment for your services is made. So if you have a 6-month contract, you need to make that appeal before that last payment for your 6 months is made. The deemed employer must respond within 45 days of you lodging the appeal, but unfortunately the original determination should continue to be applied until the appeal is resolved. So the sooner you appeal, the sooner you can sort out the taxation and what should be being deducted. There are IR35 specialists who should look at the contract and the actual working practices. If in doubt, ask your accountant for help. HMRC do have an online tool where you can check your status. This is referred to as the Check Employment Status for Tax, commonly known as CEST. The link is noted on the slides if you want to go to there. HMRC will accept this decision, but on the provision that all the answers were correct. Some clients, we are aware, are also using this to make their decision as to whether you are off payroll working. You should ensure that it reflects your personal circumstances rather than a general situation. Again, if you find you fail the CEST online test, we would recommend contacting your accountant or an IR35 specialist before contacting HMRC. If your client decides that the off-payroll working rules apply, then they will calculate and deduct PAYE, as in income tax, and employees' national insurance from the invoice value that you provided before paying you or your business the net amount. They then account for that PAYE and NI to HMRC through their payroll real-time information system. HMRC record that the PAYE and employees' NI has been paid on your behalf against your personal record. You will then need to complete a personal self-assessment tax return at the end of the year to account for that tax. Your business accounts, however, reflect the total invoice and then the payment to you as gross. It's worth noting that if you are VAT registered, VAT is not affected. HMRC are not concerned with any VAT amounts. You should also be aware that the deemed employer is responsible for any employer's national insurance and should not be deducting it from your payment. If the off-payroll working rules are being applied, you are effectively being treated as an employee by your deemed employer. You should therefore be issued with a starter checklist so that the deemed employer can determine your tax code and the details to report to HMRC. For example, they'll need your national insurance number. You should receive a remittance advice detailing any deductions, and this may be in the form of a pay slip. You should also receive a P45 if the contract ends so that you know what summary of the tax that you've had deducted, and a P60 if you're still in that contract at the end of a tax year. As you are being treated as an employee for tax purposes, then you can only claim expenses that an employee could. That is, expenses that you have incurred in order to do the work but have not been reimbursed. So, for example, mileage from your office to your client's office to work is no longer allowable. But if you then have to travel from site to site, it could be allowable and should be claimed on your next tax return. Whilst you are being treated as an employee, your business may still be incurring running costs. for example, bank charges, stationery, paying for your mobile phone. And these would be allowable in the accounts and against tax. The issue will be if you don't retain funds within your business bank account, as there will be no cash to pay the expenses. Something probably to consider when looking at a contract that is caught under the Off Payroll Working rules and whether you wish to accept it. One of the questions frequently asked is, if I'm having PAYE and NI deducted, do I have the same rights as an employee from the deemed employer? The answer, unfortunately, is no. You are not entitled to holiday pay, sick pay, pension, or any other benefits. Your own business is supposed to provide these. This is one of the big disadvantages of the off-payroll working. An employee will be taxed in the same way as you, but has more rights. And the reason for this is that employees' rights are dealt with under separate legislation. Whether this will be addressed in the future, we don't know. Another frequently asked question is, can I still work through my business? The answer is yes. You can work through your business under off-payroll working. You can change the way you work during a tax year, so each contract could be different. You may decide to work one contract as an employee, another as self-employed, and yet another through your personal service company. You do whichever is best for you. And then at the end of the year, you account for all the different elements on your annual self-assessment tax return. The flexibility is yours. This is the benefit of being self-employed. Some confusion has arisen about whether I will be taxed twice. The simple answer is no. You will account for everything on your self-assessment tax return. Calculate the tax that is due and then deduct any tax that you've already paid. This will include any tax that has been deducted under the off-payroll working rules, which is why you need the summary, either the P45 equivalent or the P60 equivalent, so that you know what to put on your self-assessment tax return. So what do you need to do to prepare for the introduction on the 6th of April 2021? Firstly, don't worry. There will be some confusion at the beginning of the introduction of the off-payroll working rules, as we saw when it was introduced with the public sector, but they will be resolved. Talk to your client. Ascertain if they need to apply the rules. If they're a small non-public sector organisation, they may not need to. They are required to tell you if you ask. They may need some information from you to help them decide if the rules apply. The sooner you do this, the better. Ensure you receive your status determination and the reasons for it. If you are deemed to be within the rules, you may need to appeal. Estimate what this may mean to your take-home pay. Will it be short-term or long-term? Consider if you should be looking for an alternative contract. If in doubt, talk to an accountant. Thank you for listening. I hope it's proved useful and made the off-payroll working situation a little clearer. If you want to discuss anything further, please feel free to contact us at Foreman's and we will be more than happy to help.